Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 29th of January, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go for our usual regular run through with a slight twist that we have for a Monday, where we look at what I like to call the shape of the week. The shape of the week. Why do we do that? Even though we're day trading at trade day, it's important to know what kind of day we might be expecting today. And that is certainly influenced by what's coming up, not just today, but coming up through the week. And today's a great example of that. We have a huge week. Yeah, one of the biggest weeks of the year, definitely. Even though we're only at the end of January, figures events of the whole year, because it's not very often that we get the trifecta, if you will, of both Fed, and we also get employment report, and we're right in the midst of the earnings season. It does happen. It happened about, I can't remember, about 6 or 9 months ago, where it all fell at the same time. You had the Fed was right at the beginning of the month, and that then coincided with, it might have been actually CPI then. It might have been CPI, plus we had earnings coming through. I can't remember what the actual date is. About 9 months ago, I remember saying exactly this on the webinar. It's a huge week. It doesn't usually happen. And then what we do have this week is we have the Fed on Tuesday, Wednesday meeting with the announcement on Wednesday. Please remember, if you're new or newish to trade day, no trading 2 minutes or before or after the Fed, and no trading 2 minutes before or after the US employment report, which usually comes out on the first Friday of the month, and it is coming out the first Friday of this month, of next month, which is February, which is on this Friday. So Wednesday and Friday. Wednesday we have the Fed announcement, no trading 2 minutes or before or after the announcement and statement, and then Friday we have the US employment report, no trading 2 minutes before or after that report. We've put up notes in the forums. We've put on notes up in the we've sent emails out, and then it'll be in the heads up scrolling above where you are right now, actually. As we go into Wednesday and Friday, also announced you get the alerts in the Discord group. So no excuses, guys. We've flagged these out. So not only do we have that, though, but we also have a whole set of earnings coming through from big tech. So this week we get four of the big, whatever you want to call them, 5, 6, 7, the Magnificent Seven. We get Microsoft, Apple, Amazon, and Alphabet, which is Google. So we're getting all of those this week as well. So it's a huge, huge week. Now, when do we get those? We get those on Tuesday and Thursday are the earnings, okay? And we'll look at those as we go forward. Wednesday, the Fed. Friday, the employment report. So Tuesday, Wednesday, Thursday, Friday, massive days for the market, massive potential days. You might be thinking, well, I trade the S&P and the NASDAQ. Why is that going to, why the earnings going to impact me? Well, the earnings certainly do when we're talking about the big seven, the Magnificent Seven or the FANG stocks. And we have 4 of those out, 2 on Tuesday, 2 on Thursday. And they can impact on the broader market. So you're certainly going to be wanting to watch those when they come out. And then on top of that, then what does it mean then if we've got all these events, all this potential volatility, all these significant fundamental earnings, central bank, macroeconomic data events coming out on Tuesday, Wednesday, Thursday, Friday? The likelihood is today is going to be a quieter day. And that's why it's important to look at the shape of the week, what I like to call the shape of the week. Because if we've got all of that coming, right, then the chances are the markets are going to take a breath, take a little bit easier today. I think we're going to have more of a consolidation day. I do think the market remains bid. What do I mean by bid? I mean strong, positive. The risk is to the upside, and making yet new all-time highs is a potential going into today. Are markets, is the NASDAQ likely to shoot up 2% today? No. Is the S&P likely to be up like 1.25% today? No. So you have to temper what you're looking at. So that's why it's important to look at the shape of the week. Could we be up 2% on one of the other days? Yes, we certainly could on the NASDAQ, but unlikely today. Could we get back-to-back massive gains? Could we see the market rally 2% and then back down 2% on the NASDAQ, on consecutive days, depending on the news, as the news comes out? Yes. But is it likely to happen today? No. So then you might just be thinking, well, today's more of a consolidation day. If you're more of a trader that trades better in ranges, today's going to be a better day for you. if you need an impulsive move in the market to move quite quickly, is that's your style of trading, then today's probably not the day for you. And you've got loads of opportunities over the next 4 days. So maybe today's a day where you don't trade as aggressively. If you're looking for momentum trades, if you're looking for bullish impulsive or bearish impulsive moves, then you're less likely to get those today, and you are very likely to get those over the next 4 days. Right, let's look back before we continue to look forward in here. So I've got the 2 reports that we published right below where you are. You've got the 3 columns: fundamental reports, technical analysis reports, and the news reports that we get daily updated from Live School. These are the weekly news reports that I put in that we write here at Trade Day. So you get the bigger report, which is the macro matters, which goes into more depth and has looked at everything that's happened over the last week and has a look in a little bit more depth at what's going to be coming up going into this week. If you want to go through and learn more about your fundamentals and your macroeconomics, this is the place for you. But for today, what I'm going to do is just do a quick recap of what we've had and what we've got coming up for the week by looking at the weekly recap. This is just a shortened version of that macro matters. So the macro matters here is the bigger version in here, the more in-depth, and this is the shortened summary. Okay, so what did last week see? Well, we had a big move up again in here, record highs again for the US stock averages. What do we get on the earnings side? Well, we got Netflix beat, and also IBM also did well, but then we had a negative out of Tesla. Okay, so kind of mixed on the earnings, but generally overall positive, but Tesla was a negative. US data GDP was the surprise on the upside, which is a positive, and then the core PCE, which we flagged. Remember, this is the Fed's preferred inflation measure that came in slightly better than expected, below expectations. That's good for the market, right? Because it's basically a measure of inflation. So it came in at 2.9 with the anticipated at 3% in here. So that was better as well on Friday. So the macro data last week was positive. Most of the earnings data was positive in here, although so we did get Tesla get hit by their guidance disappointing, and also some of the actual headline date numbers on Tesla weren't too good either. I think this is a real positive for the market in that we're actually seeing anticipation of a Fed rate cut in March is fading. We've been talking about this for over a week now, for a couple of weeks. The Fed, before we went into the Fed blackout period, which we're in at the moment, the Fed dialed back this kind of exuberance we got. Remember back in the Fed meeting that we had when they continued on pause, and kind of we got the dot plot chart, and there was an indication that they were going to pivot to start cutting rates. And then the market got very much ahead of itself through December into the beginning of January. And now those kind of anticipation of a rate cut, the first rate cut coming in March, have been dialed back. And now the actual market is looking at either June or maybe May as for the first rate cut. Okay, and we see that on the CME futures in here. If we look at the March in here, so it's kind of 50-50. So 50% here to unchanged. This is the column unchanged. Remember the current rate, target rate here, 525 to 550, 525 to 550, nearly bang on 50% and 50% for a rate cut. So it's kind of 50-50. Remember at one point this was up at like 80% basically for a rate cut, and now it's kind of 50-50. Okay, and this has actually been higher. This has been up to into the 60s in here. So actually even less of a chance of a rate cut. But now you see the more chance of a rate cut in here. Now there's only 11% chance that we haven't cut rates by May, and only 11% chance still that we haven't cut by June. So the market very much expecting a rate cut in May / June or May, and then likely probably a pause in June. You see the charts in here for between May and June are not very different here. So looking for probably a cut in May, nothing in June, and then we're looking for further rate cuts coming from July. So that's what the market's starting to price in. So going back to our reporting here, I think it's actually a positive. The market is dialing back its anticipation, but the equity markets are still going to new highs despite that. What else we have this week? We had the ECB giving no hint on when its first rate cut's going to come, and we did get a stimulus from China, from the PBOC, changing their reserve ratios for banks in here, which is a monetary policy stimulus, which helped stem the negativity, the big sell-off that we've seen in Chinese stocks, not only in the last so far in 2024, but previously really the big underperformance we've seen over the last couple of years actually. So what was the tail of the tape on the markets? Well, equities were up, all-time highs on the US. US and European yields actually went to higher yields as we get this dialing back of an anticipation of earlier rate cuts, yields actually going up. So the equity markets are doing particularly well. We've had this dislocation. Remember at the end of last year, even the beginning of this year, we were talking about equities, this kind of this positive correlation with equities going up and bonds going up. If we look for this year, equities have continued to go up here. And if we go to the bond markets, what's happening? Bonds, there's a positive correlation here through October, through December. And now in January, bonds have been selling off and they're still looking negative in here. You can see lower lows and lower highs here on the 30-year. If we jump down to some of the other 10-year as well, probing down to new low prices equals higher yields. So bond yields are continuing to probe higher, but equities are happy to go higher, even despite yields going up, bond prices going down. So that's definitely seen as a positive. What else we got? The dollar index was sideways, gold futures were sideways, and oil continues higher, and even higher this morning with the attacks on the US base in here, potentially fingers pointing at Iran for that. So we've seen oil futures extend higher again this morning. So what have we got coming up this week? What are we focusing on? Well, clearly it's the Fed on Tuesday. Wednesday is the meeting. We get the announcement on Wednesday. And then Thursday, which I didn't mention there, we also, at the top, we also get the Bank of England. Okay, no change expected there, but maybe some guidance about when the first rate cut is going to come out of the Bank of England. So that'll be interesting to watch as well. That could have an effect on US indices as well, because obviously if we get some kind of a dovish pivot, then that's going to be good for UK and European stocks. And then that could help push US stocks higher as well. What are we watching for this week? Well, we do have EU GDP Tuesday, Japan retail sales. But really the big standout in here is that we get the manufacturing PMI, actually, global manufacturing PMI out on Thursday from the US and global data. But the most important data, really, the US employment report on Friday. We do get the US ADP, the precursor to the official report, that comes out on Wednesday. And we can see that all through here. So today, look, as well, nothing of note on the macro side. And also, if we jump onto the earnings, nothing really big on the earnings side. So this is what I was talking about, the shape of the week, right? We've got no big data. We've got all of this huge amount of events coming up. Two big central banks in play, the Fed and the Bank of England. We've got all this big data coming up. And then let's just skip forward to the data. So really the big standout is the US employment report, but we also do get S&P Global and US ISM manufacturing on Thursday as well. And we've got some fairly notable European numbers in here coming through going into the beginning of the week. But, the real kickoff is going to be the Fed on Wednesday on the bigger macro side. But on the micro side, this is going to be the focus in here. So we do get Pfizer and Starbucks as well on Tuesday, but the big focus, and these are always after the bell, the big tech always after the bell, Microsoft and Alphabet, and we'll come to the earnings calendar shortly. We get them on Tuesday. Some others of note in here, MasterCard, Qualcomm and Boeing all reporting on Wednesday. Boeing can often have a big impact on the Dow because the Dow is a price-weighted index and Boeing has a big price, okay? So Boeing has a big impact potentially on the Dow. Then we get Apple and Amazon reporting after the bell on Thursday, another huge day. So as I said in here, Tuesday, Microsoft, Alphabet, Wednesday, Fed, and then Thursday, Apple, Amazon, and then also get the Bank of England, and then Friday, the US employment report. And then we move on to looking at the energy sector in here as we go into the end of the week. On Friday, also, we get ExxonMobil and Chevron reporting. So lots going on. Let's look at the calendar. You see the calendar today, very light. So nothing really of significant note coming out today. We've already looked at the bigger calendar going forward. And here's the earnings calendar. You see nothing really big. The biggest company from the US of any kind of note, 43 billion, not a big company. When we've got $3 trillion Microsoft reporting, Google as well. So you see Microsoft and Google, the big standouts on Tuesday. Wednesday, MasterCard, Qualcomm, Boeing, and then Thursday, Apple and Amazon. And you notice these are all looking all after the bell. We've got the little moon for these big guys in here. We'll go back up to Microsoft and Apple, the little moon. That's after the close, after the market close in the post-market, okay? But it doesn't mean it can't affect the futures, okay? So they can obviously jump around. So that's what we got coming up. Let's have a look at 5 things to start your day in here. Evergrande, the big note out of Asia is Evergrande, property developer likely set to go into liquidation. Maybe this is finally putting into the rear view mirror the property woes that we've seen coming out of China over the last year, that has certainly seen dragged down China's economic growth, as it says there. Oil retreated after hurling at its highest level since November. So oil spiked higher after the US and Iranian-backed militants killed 3 service members in here in the Middle East in here. So no, Iran have pushed back on that, saying that it's baseless. But oil spiked higher initially and then has come back lower since then. Big week ahead. We've already covered all of this going forward. US rules ripple in here. What's this? Noble new okay, nothing is going to significantly impact us. And Reddit looking at a potential IPO. Again, these not really impacting us. This is what we're really looking for going into this week, all that we have coming ahead, but not much today. So stocks made a cautious start to an event-packed week. Okay, so as we said in here, nothing really. So we've got all listing the things we've been talking about, and it's going to be likely be a quiet today. Futures muted ahead of Fed decision, tech earnings this week, and there's the why Chopper Bryant Giant Evergrande faces liquidation, and the oil as well in here. Freight and insurance costs will rise after the attack on the ship. Biggest wildcard is response by US to Iran. So this is going to be what we're going to be watching in here, because they did blame these deaths in here of the US soldiers in here on Tehran in here that we saw in here over the weekend. So I say initially we saw a spike higher, but it's going to be maybe how the US maybe responds to that as we go forward. I say look, oil raises gain as traders digest latest middle. So we got a spike higher and then it came back to be little changed, spiked higher. Brent crude this morning up 1.5%. We've already looked at the Fed Watch tool in here. Let's take a look at the overnight. So Asian markets up on the overnight between the Nikkei, the Japanese Nikkei, and the Hang Seng Hong Kong index up about 0.8 this morning. We've seen the FTSE actually nudge up 0.25%, the German DAX down 0.5%, and the French CAC little unchanged on the overnights. And if we take a look in here on the overnights for the, what happened there? I don't know. On the US, and you can see very little change in. Nasdaq's actually up 0.25%. A quick nod in here to the charts. But we've been going some time there. You can see in here we had the market's kind of been a bit paralyzed since last. What was this? This was this kind of like a gravestone doji back last Wednesday. So the market up and then back lower, kind of failed. Then we were back higher on Thursday, but an inside day contained within the pattern from last Wednesday, last Thursday. Then Friday, I think just made a new high. This is all on the ES, by the way. 49.34 and a quarter. I think we just made 33 and a quarter. So we made a high by 1 point in here on Friday, but then little unchanged, like a spinning top pattern. And again, consolidating. I think positive consolidation may be back up towards the highs, but probably not much more than that. If we go take a look at the 30-minute chart, you see we've kind of been chopping in it. We just made a new high. I think there's probably upside, but maybe only towards like 49, 30, 35, and then maybe back down from there. Do not look for too much from today in direction, because with all of that coming up, I can't stress it enough in here. It's all about knowing the shape of the week. I think it's really important that the chances are it's going to be a relatively quiet week in here as we go into today. Sorry, not a quiet week. Forget that, a quiet day. Okay, it's going to be probably a very, very busy week. I still very bullish in here. I still think we break out and continue to the upside, but we'll have to see what the data brings. And you can see in here, similarly back on last Wednesday on the Nasdaq, we had this shooting star, and then we had another kind of shooting star, both negative candlestick patterns in here for the Nasdaq on Wednesday and Thursday, and then down Friday. But you can see holding above this important swing low, from back on last Tuesday. That low down there is at 17,409.5, and you can see we're rebounding from notably above there. And if we go into the 30-minute charts, although we've got this kind of downtrend in here at the moment, it does look a little bit wobbly in here. We're holding above that important swing low and rebounding from above there. And if we look at this little kind of counter trend line that we have coming down through here, you can see we're already up and through there. Really, ultimately, for a bit more positive today, we need to be back above 17,630 to 17,630 to 650.55 area. Up above there would open up potential upside in here for the Nasdaq, but again, not looking for too much. Certainly not looking for it to get back up to the highs and through the highs. Maybe it's up to that 17,630 to 650 kind of area. Maybe breaking through there up to 17,700, but not looking for too much more than that. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Don't expect too many fireworks. Keep the powder dry for the rest of the week. Today's a day just to watch the market, not do too much, get enough feel for the price action, and get ready to pull the trigger, because you're likely to get a lot more opportunities as we go Tuesday, Wednesday, Thursday, Friday. All right, guys, have a good one. Take care. Stay safe. Bye.